China's inflation rose again for the month of March despite mounting government efforts to cool costs. Consumer prices rose about 5% in March over a year earlier. Anil Gay reports on the mounting pressure on Beijing to bring down inflation and continue the growth momentum.
Prices in China pushed to 32-month highs last month, while the economy continued to grow at a fast clip. Inflation surged to a higher-than-expected 5.4% in March, while the world's second-largest economy continued to sizzle, posting growth of 9.7%. Economists agree that high prices would persist in the first half of the year, but opinion is more divided over the second half.
It fits into the scenario we paint for China, and that is there's going to be an inflation problem early in the year because of low base effects a year ago. We think the sequential or the week-on-week, month-on-month price trajectory is slowing down, and by the middle of the year you will have lower inflation.
The strong first quarter growth number also suggests the central bank's tightening campaign has not undermined growth as earlier feared. But the data raises new questions over whether the central bank is really near the end of its tightening campaign. Many economists say the growth momentum is starting to slow, but still expect further tightening in the current second quarter.
When you look at the quarter-on-quarter numbers, the industrial production, other real sector data, it is showing a slowdown in growth sequentially. So growth is slowing down, and we expect that to continue into the middle of the year or perhaps the third quarter as well. It's all setting up for an expectation by the market that monetary policy will pause, that there may be some re-stimulus efforts if the economy does not begin to pick up naturally on its own again.
Interest rates in China have been raised 4 times since last October, while big banks have been forced to lock up a record high 20% of their deposits as reserves. Anil Gay, Reuters.
All right, let's keep it in Asia. Go across to Kathy Yang, joining us live from Hong Kong for a check on how the market shaped up there. Hey, Kathy, China inflation at a 32-month high. What did it do to markets today? Most of them fell. Take us through the action.
Well, investors took profits, taking Asian shares to its first weekly loss in a month. China's strong inflation and growth figures made investors cautious. Stocks in Hong Kong slipped as traders braced for another round of policy tightening from Beijing. But those over in Shanghai managed to close at a 5-month high. Over in Japan, semiconductor stocks led losses after some chip makers faced downgrades by Bank of America Merrill Lynch, an impact from the March earthquake. The Nikkei 225 dipped over 0.5%, but is still more than 7% below the time disaster struck last month.